Let's welcome our technical expert on the show today, and that is Shivangi Sarda joining us from Motilal Oswal Financial Services. Shivangi, hi, good afternoon, and first of all, happy Sankranti to you and all our viewers. Give us a sense of what you are making of the market move right now, because after seeing a continuous series of red, whatever little recovery we're seeing on the markets, do you think this is here to stay? This is sustainable, and even though it is inch by inch, do you think we're out of the danger now?
Ankita, thank you for having me. So we've seen that there has been some sort of a pullback move, but of course it's the Sankranti effect, and wishing the entire Eat Now team and all our viewers a very happy Sankranti. Season's greetings to all. And getting back to the markets, we've seen that there has been some stability around 23,000 zones. But then again, we'll have to see how sustainable these levels are, because we've still not managed to cross its previous day's high. We're trading in the range of the previous session itself. Of course, there has been a sharper recovery in Bank Nifty as compared to Nifty, but then heavyweights have not been supporting that much in the entire broader market. So overall, of course, there is a short covering move and a quick pullback move, but pressure will remain. And till the time India VIX does not cool off below 14 levels, I think there will be a tug of war between the bulls and bears. So volatility will contain, and one needs to fasten their seat belts to be able to tackle this volatility and the swings that we're seeing on an intraday basis. Of course. There will be a lot of swings, so traders are advised to trade accordingly. 23,000 is a band, is a support level that we're looking at. And on the upside, 23,500 is the resistance that we're looking at. Although if it fails to hold 23,000, we could see a more downside move towards 22,650 levels. Now, this is the range and the band coming out for Nifty. There are a lot of call writers strongly standing at 23,500. So an unwinding is required at those levels to again, start the fresh leg of rally. So a lot of conditional trades here, but volatility is certain, and one needs to trade accordingly. Now, talking about Bank Nifty, of course, there has been a more weakness over here, which clearly, indicates that heavyweights have not been contributing to Bank Nifty at all. We've seen that the Bank Nifty to Nifty ratio has also, tampered much now. Now, if we talk about the levels, we have not been able to, cross 49,000 even today. So 49,000 will be a hurdle for Bank Nifty on an immediate basis. This needs to cross for the next leg of rally towards 50,000. 49,000 emphasis here, because this level is going to be a little difficult to cross with a support of 48,000 levels. So buy on decline to continue over here, but just for intraday perspective, overall swings will continue, and one needs to be totally hedged in such a kind of a market scenario. Till the time India VIX does not cool off, this is going to be there for some time now.
Right. Hi, Shivangi. Good afternoon. This is Ankita also joining in. You mentioned Nifty Bank, but Nifty Bank had hit its 6-month low. Is it really, trading in its oversold zone? Is it time for a reversal? Do you see further breakdown happening in Nifty Bank? That, and also a couple of sectors that are, trading at their multi-month lows. Any pockets of value that you see in this market?
Surely, Ankita, Bank Nifty has seen a more hit as compared to the broader market, and we've seen that all the immediate support levels have been broken, quite recklessly, and we've seen that the rollovers were also quite disappointing this time from December, and clearly there was a lot of shorts that have been carried over. So Bank Nifty is poised to be in a little more weakness and this volatile range. But we are expecting some sort of consolidation or a pullback move, but that will also be very minor at these levels, because the overall, the main drivers of Bank Nifty have not been performing. Now, some of the NBFCs are still showing some strength. Some new age companies are also picking up, but the main drivers, the heavyweights, have not clearly not shown any strength. So I believe some more weakness and pressure will be there on the upside for Bank Nifty. Even the put call ratio is near 0.56 right now, which indicates that call writers are getting more comfortable in this kind of a market.
Okay, and just on that note, based on the call writing that we've seen yesterday, Shivangi, 23,300 is the next resistance level that we're seeing for the upside on the Nifty. How long do you believe till we reach that level? We breach that level, hopefully. And which part of the market do you think is going to be driving this rally? Do you think this is going to be large caps, or now do you think the broader markets are once again going to take control?
Definitely, 23,300 is the next hurdle zones. As I said, even the yesterday's previous day's high has also not been able to surpass. So there is some sort of rejection at the higher zones, or we can say there is lack of follow-up buying at these levels, which is making the upside cap. But definitely, stock-specific action will continue. Yesterday, we had seen that IT was the main driver. Today, we've seen, the flip side, the tables have turned. But overall, I believe sector or stocks that are going to continue contributing to this strength or maybe recovery will be some of the exchange related stock market related stocks. Of course, all disclaimer disclosures applied. We can look at some of the exchange related counters. Also, I'm looking at some of the selective pharma names which are looking quite good. So these are the pack. Of course, metal and IT will be very much affected by the global news. So this is some pockets that will remain volatile. So I would recommend, having a stop loss or having a hedge strategy in those kind of counters. Now, the another sector which looks quite promising for a short covering move right now is auto pack. So auto can definitely be looked out for a good risk reward at these levels.
Right, Shivangi, you mentioned two names, the pharma and the auto for short covering in the short term. But what would be, it's clearly a stock pickers market, given the volatility that we are seeing in the market. What are your top bets?
So definitely one of the top pick from my radar will be from the auto space, which is Maruti. We've seen that there has been a good amount of open interest addition here, almost 44%. And the good part is that we've seen that the stock has exactly retraced and took support near its 50 demo. And after that, we've seen a good recovery from those levels. Now, Maruti has already, seen a good support level at near about 10,500 to 11,000 zone. So this juncture was very important for Maruti to hold, and we've seen a stability come through those. Even last week, we saw that there was a price volume surge, which was seen to continue as well. So overall, stock looks quite positive, and we can look at Maruti for buying zone for a target of 12,100 and a support of 11,450 levels. Now, the second pick on my radar in such a kind of market will be from the pharma space. A defensive pick, I'm looking at Biocon, which has, witnessed a cool off in the IVs and a rise in the put call ratio. Excellent volumes can be seen on the buying side. Even yesterday, the last hour, we saw quite a lot of buying and volumes adding up here. It's all ready to surpass its immediate hurdle of 388 levels and poised for a good up move. The risk reward is quite favorable at these levels. So look at Biocon for 400 levels and a stop of 375. So
Okay, Shivangi, thanks so much for joining us and sharing your views with us. So Maruti Suzuki and Biocon looking good to Shivangi right now. On that note, Shivangi, we'll let you go. Thanks so much once again for joining us. But well, Shivangi mentioned one stock, Biocon, and we also have an HSBC note on that stock today. That stock seems to be doing pretty well. And the note, HSBC has upgraded the stock to a buy from reduced target price of 430 rupees from an earlier 290. It's a massive update coming in when it comes to the stock price. They say there's a turnaround in sight for Biocon. It is set for operational turnaround led by key biosimilars launched in recovery and in generic sales as well. And of course, yesterday we heard that clearance of the Malaysia plant coming in, the VAI that the US FDA had granted. So the stock has been doing pretty well over the last couple of days, and last 6 months also the stock is up 12 odd percent.